this section, we're going to look at prices and discounts on those prices and some other concepts around the idea of pricing. So we'll start with a recap of some simple ways of talking about prices. And then we'll look at what happens when the price is zero, when there is no charge. Then we'll cover some of the language of changing prices, prices that are going up or down. And in particular, when there are surcharges or additional charges, an addition to the price. Then we're going to look at reducing the price, giving some sort of discount. And we'll also talk about whether a price is a fair one, if it's good value. So let's recap some monetary amounts, some examples of prices, just to get us ready for the rest of the vocabulary in this section. So we could have a dollar amount like $4.50, or a sterling amount like £6.05, or 400 euros, or $62 million. What about when the price is zero? So obviously we often use the word free, but there's a problem with the word free. You need to be a little bit careful, because free also means without conditions, or available to everybody, or without commission maybe. So that's what this is saying, right? Free cash at this ATM, at this cash machine. It's saying that you can withdraw your cash without any additional commissions. So often when you get involved in a transaction, there's some kind of payment you have to make. There's maybe a commission of 5%. And very often if there's a commission, there'll be a minimum amount. So you might get a commission of 5% with a minimum of £5, for example. And if we use the word free, in this example, for example, the word free here indicates that there's no commission. But of course, you don't get your cash for free. That cash amount is still deducted from your bank balance. So another example would be maybe in a hotel, you notice that it says the use of the pool is free of charge. Another word we use for free in the case of hospitality very often is complimentary. I got a complimentary chocolate when I went to the hotel. If you come on our training course, you get a complimentary pen and pad. So complimentary in this case indicates that it's something that's given as free to your clients. We also use the word gratis. It's not an English word, but it's one of the borrowed words that we have from the European languages. Gratis. You can say it's for nothing. So you can use the pool for nothing. We can talk about a giveaway, right? We're giving you this pen and pad for free. It's a giveaway. Be careful if you see the word priceless. So priceless looks like it means free. It looks like there's no price. In fact, priceless means that something is so expensive, it's so valuable, that you cannot assign a price to it. You can't give it a value. You can't evaluate it, because the value of this thing is so astronomical. It's so huge. So priceless is really the opposite of free. Now, often, of course, we're comparing prices, and prices move. Prices change. Prices go up and they go down. Prices are higher or lower. Things cost more or things cost less. So let's look at some examples there. We can say your dollar goes further here than in London, right? So in some areas of the USA, your dollar will go further. You can get more for your dollar. You can buy more things for $1 than you can in a very expensive city like New York or London. We could say accommodation in Derby cost a fraction of London prices. It costs less. It costs much less. It costs just a fraction. We can talk about prices being too high or too low. The price of coffee is too high. The price of gold, in my opinion, right now is too low. And then maybe prices will change. Prices are going up. Prices are increasing. And on the other side, prices are going down. Prices are decreasing. Now, when something costs too much, we say it's expensive, of course. Sometimes you see the word dear. Things are getting too expensive. Gas is too dear, right? When prices go up, we talk about inflation. When something is priced too low, then we say it's too cheap. And when prices are falling in the entire country, we talk about deflation. So inflation is the situation where the price of all or most things, often we talk about a basket of consumer goods. And if the average price of this basket of consumer goods is increasing, then we can talk about inflation. If the price is decreasing, then we can say that there is deflation. We have a deflation in the market. There's also a peculiar situation where the prices are not moving, and we call this sometimes stagflation. So the prices are stagnating. The prices are not moving, they're stagnating. It's another word for not moving, but it's a word that has negative connotations. So the prices are stagnating, and this is bad for the economy. We call it stagflation. Of course, the corollary of prices going up or down, that's only important if wages are also going up and down, and it's a combination of those movements which is important. So this is when we talk about the cost of living. Prices are increasing, but wages are staying the same, so the cost of living is increasing. Sometimes you have to pay some additional charges. So you have the standard price for the good or the service that you want to buy, but sometimes you have to pay a little bit more. There are sometimes some surcharges or some additional charges. Maybe you have to pay a down payment or a deposit. So this is a part of the total price that you have to pay in advance. Normally it's a percentage of the total price that you have to pay in advance. And we sometimes call this a down payment, or we might call it a deposit. And this ensures that the transaction will go through. You make sure that the transaction will complete by paying a down payment or a deposit. And this is some percentage of the total amount. Quick word on the language of taxes or tariffs. So taxes or tariffs, these are amounts that are levied on some action or transaction, and the money generally goes to the government. And we talk about applying or levying a tax. So the government applied a tax of 7%, or the government levied a tax on alcohol, for example. Also, we talk about tax, of course, when we talk about our income being taxed. Income tax, or a tax on corporate profits. And in this case, we often talk about tax brackets or tax bands. So depending on how much your income is, you pay a different level of tax, a different rate of tax. So maybe for the first 20,000 euros of your income, you pay 0% tax. For the next 20,000, you might pay 20% tax. And for anything you earn over that, over 40,000, then you pay a rate of 40% tax. So these we would call tax brackets or tax bands. Another additional charge which you might get on an invoice or some sort of transaction, a contract negotiation, is a penalty. There may be a late payment penalty, maybe 2% per month, for example. We can sometimes also talk about a fine. When you get some sort of punishment, some sort of contract penalty that's financial, then we often call it a fine. You incurred a fine of $40. We often use the phrase to incur. We often use the verb to incur. I incurred a fine, or I got a fine. I got a speeding ticket and a fine of £250, for example. So a fine or a penalty sometimes is another charge that has to be paid. What about discounts, reductions in the price? One very common phenomenon is the loyalty discount or a fidelity program of some kind. So your local store might say, listen, we're going to give you a special price. I can give you a discount. I can give you a loyalty discount or a loyalty reduction, a special deal to reward your fidelity. And that might be a percentage. It might be that once you buy 11 coffees, you get the 12th coffee for free. You get the 12th coffee gratis or for nothing. And sometimes this special deal will just have a limited time, right? This special offer only lasts for a limited time. There's just a short window during which you can claim this discount. Sometimes when we have some kind of discount that you can claim, especially if it's a voucher, then we talk about redeeming a voucher. You can redeem a voucher before the end of May, for example. And then when you hand over the voucher, when you present the voucher to ask for your discount, you redeem the voucher in return for a reduction in the price. We have a few different expressions we can use to talk about these discounts. We can use the verb to give, right? So we say the shop, or let's say the supplier, Square Circle, this company, Square Circle, gave me a 10% discount. Or they gave me 10% off, we often say. This is a great deal, it's 10% off. That means a reduction of 10%. So you only pay 90% of the price. Maybe they knocked 10% off. This is more colloquial, more conversational way of saying it. Hey, I knocked 10% off the price. You're a special customer to me. If you're very lucky, you might get an extra 30% off your already discounted price. So we can talk about a discounted price. So this is the discounted or reduced price. And, we need to get rid of this stock. So I'm going to give you an extra 30% off. There are other kinds of reductions of the price. The items you're selling can be on sale or in a sale, or there could be a promotion. So in both of these terms, to be on sale or in a sale or on promotion, we mean that there's a special price or maybe some other special conditions, often for a limited amount of time. One good example is the Bog-Off promotion. BOGOF, buy one, get one free. Normally you have to specify that the cheaper item is free, right? So that somebody doesn't buy 2 items and then try to claim that the most expensive item is free. So there are other types of promotion we can have. The reductions that we talked about before, where you just have a discount of 30% or 70%, this we might call a markdown. 30% off, 70% off. But with this buy one, get one free, we have a different type of sales promotion. Another way of talking about this percentage discount, by the way, is using fractions. So you could say it's 33% off, or you could say it's a third off. You could say it's a reduction of over 25%, or you could say it's more than a quarter off the price. A discount of 40%, you could say it's 4/10 discount. That's much less likely, I would say. We normally talk of a third off or a quarter off, right? If it's 40%, then we're much more likely to say a discount of 40%. Very often, of course, we have half price. This item is half price, or maybe nearly half price. Again, with our 40% discount, we might say it's nearly half price. Something you need to be a little careful of. Half price, of course, is a 50% reduction, a 50% discount. If you want to say, well, you know, the discount is actually a little bit more than 50%, you might be tempted to say it's more than 50% off. Now, this isn't clear. Is it the discount that's 50%, or is it the remaining price that's 50%? So that's why people often use the phrase better than 50% off, right? So the discount you're getting is better than 50%. And the same way it works as well to say the price you're getting is better than 50% off. So we've talked about taking a percentage off the price, knocking 20, 30, 50% off the price. And we said, you know, there's one very common case is a sales promotion, a sale or a special promotion. Another kind might be a goodwill, a gesture of goodwill. For example, a discount for faulty goods, or a discount because of a delay in performing the service. So in this case, we might say, look, you know, I'll knock 250 euros off the price, or I'll give you a refund of 250 euros, or I'll give you a refund of 20%. So a refund is more often when you repay the money back. I'll give you a refund of 20%. You paid me £100. I delivered the service late, so I'm going to give you £20 back now, right, at a later date. Another discount at the point of sale, another special occasion, is if you have to get rid of the stock, right? So maybe the stock is damaged. We often use the phrase a fire sale. Now, obviously, this sounds like your stock has been damaged by fire. Your inventory or your stock, the items that you're selling, it sounds as if they've been damaged by fire. But in actual fact, it can describe a lot of different situations where maybe they've been damaged by water, or they're past their sell-by date. Or maybe you have to sell them quickly for some other reason, because you have to liquidate your stock, because your company is going bankrupt, or you have to raise some cash quickly. So you liquidate the stock, you turn the stock into cash by selling it quickly maybe at a reduced price. So we often call this a fire sale. Damaged goods, or the need to liquidate stock quickly. Maybe you're moving premises, right? Maybe the firm that's offering these discounts is moving its headquarters or its shop to a different address. The price is reduced for a quick sale is a phrase you often see. You might say something like, today only, 50% off all goods. Another phrase you often see in this connection is, everything must go. Today only, everything must go. The whole stock must go. So there's a fire sale, there's a reduced price. An important situation in which you would hope to pay less for your purchase is when you buy in bulk. So remember, to buy, we can also say to purchase. And if you purchase the goods in bulk, we might call this bulk buying or wholesale buying, then normally you expect to get some kind of discount. So we use the phrase wholesale, and the other version, or the opposite if you like, is retail. So wholesale is normally one company selling to another company, and in that case we normally mean in larger quantities, in bulk. And retail is normally selling individual items to individuals, right? So normally when you buy in bulk, the marginal price is lower. The price per unit is lower. So if you buy in quantity, you buy in bulk, or if you buy wholesale, then you're hoping to pay less for each item. Right? Maybe you can get 1,000 units for only 3,000 euros. That's €3 each item. You can say that works out at €3 per item. We mentioned refunds earlier. So a refund is when you've paid the full price, and then for whatever reason, at some later date, you get a percentage of that money back. Or in fact, it's also possible to get a full refund. So if the thing that you bought is faulty, if it's defective or faulty, then you can ask for 100% refund. You give back the good that you bought and you receive 100% refund. In some cases where you pay, for example, your taxes, and then you get some percentage of that back, in this case we talk about a rebate. So when you pay an amount that you're supposed to pay and you get a percentage of that money back, this is a rebate. It's very similar to a refund, but a refund is when you purchase something, and a rebate is on some other payment that you make, normally for taxes. And you would say, I got a refund, I received a refund. Maybe it's because of the guarantee. The guarantee is a promise that if there's a problem, that you will be refunded, or that you will receive a rebate, or that you will get your money back. So often we use the phrase to get your money back. Another way of organizing a discount is to issue a voucher. So if the seller issues a voucher or gives you a voucher, presents you with a voucher, then you can use this voucher for future purchases. We sometimes say you can use this voucher against future purchases. You can use it when you buy something in the future. So make sure you keep the receipt, of course. So this word receipt has a silent P, R-E-C-E-I-P-T, a receipt. And if you keep the receipt and you keep the voucher, then you can prove that you have the right to a discount. Maybe you get $15 off your next purchase. Or maybe your next purchase, the next thing that you buy, your next purchase is half price. Sometimes we set a limit on this. Your next purchase is half price, but up to a limit of $100. Let's check that we have these prepositions right. So the prepositions, words like by, from, to, right? So the price has been reduced by £20. If the price is reduced from £100 to £80, then we can say that the price has been reduced by £20. If the cost goes up, the cost went up by £20, or in fact we can just say the cost went up £20 from £100 to £120, for example. So the price has been reduced by £20, or maybe the cost went up by £20, or the cost went up £20 from 100 to 120. Another thing you have to think about with purchases is your payment terms. What are the rules about how you pay? We mentioned before a down payment. Maybe you have to make a down payment or an upfront payment, or you have to pay a deposit. But sometimes you can get some beneficial payment terms, right? Sometimes you may get interest-free credit. So you get a loan, a credit, and you may pay some interest on that credit. Right now, you won't have to do that normally. So you will have an interest-free credit. So you pay zero interest on the loan that you're given. And this means you can pay back, you can pay for the good or services over a period of time. We have other phrases for this, such as hire purchase or a kind of lease arrangement where you pay for the goods or services over time. In this case, you have to look out for the annual percentage rate, the APR. You have to make sure that you calculate, if it's an interest-free loan, then you're fine. But if there's interest is being charged, maybe a monthly interest is being charged, you need to check what is the APR, what is the annual percentage rate. Also, to take advantage of this promotion or to take advantage of this offer, you'll notice that some T's and C's apply. So very often it says T and C's apply, terms and conditions apply. So there'll be some criteria that you must satisfy before you're eligible to take advantage of this offer. The kind of contract that we're all used to is some sort of plan or program or contract for your mobile phone or for your internet use, right? Your internet access. And in this case, you might have a quote like, it costs £25 a month, or £25 per month, or £25 each month. But more often, £25 a month or £25 per month. PM, you might see, for per month. So when you have this kind of contract, where you pay on a monthly or a quarterly or a yearly basis, then we have these regular payments, £25 per month, for example. And the contract may last for 24 months, right? The contract lasts for a duration. We talk about the duration or the term of the contract. So in the example here, the contract lasts for 24 months. And this contract we're calling a package, a pack or a package, because very often there's several services bundled up. We use this phrase to be bundled up, to be put together in this offer. Maybe it's your internet plus your landline plus your mobile phone. These services are all bundled up in one contract. The contract costs £25 per month and the duration is for 24 months. You commit to a 24-month contract. Right, so you hear the way I said that, it's a 24-month contract. We don't put an S on month in that case. How long is the contract? The contract is 24 months with an S, or the contract lasts for 24 months. But when we use this 24-month as an adjective, we say it's a 24-month contract. In this kind of contract situation, where you pay the £25 every month, and if you later find out that there was some problem with your account or the service that you paid for wasn't delivered, then that's when you might get a rebate. You might get a refund, you might get a payment back at a later date, and we would call this a rebate. Another payment model that we have for online services or for software services is the freemium model. So you get this a lot with video games or other kinds of apps or training platforms or other services that you access through the internet or via software. And so you get the initial access is free. You can use some of the functionality for free, but then if you want to make in-game purchases or you want to purchase extra credits, in a video game, you might want to buy extra lives. On an app, you might want to unlock some more functionality. Then in this case, you have to pay. You have to pay for a premium version. So it's free at the beginning, and then you pay for a premium version later, and this is called the freemium model. So how do we talk about the value of these purchases? Well, if you think that you got good value for your money, if you think that the goods or services that you received were worth what you paid for them, then you might say that's good value, right? I got good value. That's good value. Maybe even it was great value, excellent value. You would say that's value for money. I got a good deal. That was a good deal. And if it's a really good deal, you can say, yeah, in fact, it was a bargain, right? So we use the word to bargain. When you use the verb to bargain, this just means to negotiate. Doesn't tell you if you got a good deal or a bad deal. But if you say, I got a bargain as a noun, then that means it's a great deal. You got a really good deal. You got good value for your money. Remember, cheap and expensive has no relationship really to the value. So if something is cheap but it's no good, then maybe it wasn't good value. If something was expensive but it was really excellent for you, you really enjoyed it, it really did the job, then even though it was expensive, you can say it was still great value. In terms of a business, you might say, we got a good return on investment. So before you buy something, before you enter into a contract, you might look at the ROI. What's our return on investment? Will our expense of time and effort and money, will it be worth it? Right? Is it worth us investing this effort, time and money in this enterprise, in this project, in this purchase? If it is, then we got a good return on investment. If the thing that you bought, the service that you got, was worth more than the price you paid, then we can say it's a good deal. And if it's a really great deal, you sometimes say, do you know, it would have been cheap at twice the price. Sometimes people say cheap at half the price. That's an idiom. It doesn't make sense. But yeah, you'll sometimes hear that as well. Cheap at half the price. But the version of this which makes more sense is, well, it would have been cheap even at twice the price. On the flip side, you might say, well, you know, they're not worth it. These goods aren't worth it. The service wasn't worth it. It wasn't worth the cost. Maybe it wasn't worth the extra cost, right? Maybe it's only worth half what you paid, right? You overpaid. You should have paid less. You overpaid. The goods were worth less than the price. It's not a good deal. We can say it's a bad deal. It's not good value. If it's a really bad deal, you know, then it's a rip-off. $10 for a glass of tap water? That's a rip-off, right? That's not a good deal. So I hope that I've given you plenty of examples in this session and explained some of the grammar and the vocabulary so that you can talk about the prices of things. You can talk about any additional charges, any discounts. You can talk about whether it's a good deal or a bad deal. And in general, I hope that you're now more confident in setting prices and discussing those prices.